If we look at the performance of a bunch of assets, and this is most assets over the last 14 years, what you can see is that, investing in a bunch of things don't even beat the CPI, but there are a number of things that will beat the CPI. I mean, your typical diversified portfolio, your stocks, your real estate, et cetera. But the question is, what's the real benchmark for an investor? And I don't think it's the CPI. The CPI is a very synthetic metric, which is cherry-picked by a bunch of government-paid economists in order to be the lowest possible measure of inflation. If things get too expensive, they throw it out of the CPI. A much better measure would be the monetary inflation rate, or the expansion of the M2 money supply. And it turns out that the expansion of the money supply very, very closely tracks the performance of the S&P index over 100 years. And when you think about it like that, what you realize is that when you invest your money in the S&P index, you're not making money. You're just not losing money. If you were rich 100 years ago and you held a diversified portfolio of stocks, you're still rich. If you bought a bunch of currency or bonds, you're poor. And you can see here over the past 4 years, the S&P or the monetary inflation rate looks like about 13%. And not many things beat that inflation rate. It's very, very difficult. In fact, if you're beating that hurdle, you probably beat it with big tech. You beat it with Apple and Amazon and Google and Facebook, because the best idea in the 21st century has been buy a big tech digital monopoly like a Meta or a Microsoft, somebody that's that everybody needs, nobody can stop. And if you bought it before people understood it, you're probably doing okay. And even after they understood it, you're probably okay. But diversification generally is selling the winner to buy the losers. If you diversified out of Amazon, you lost. If you diversified out of Apple, you lost. If you diversified out of Microsoft into any of the 100,000 other business software companies, you lost. And why is that? Because in the modern era, if you can establish a digital network which goes to 1 billion people, it's got such a crushing economic advantage that it's unlikely that anybody else is going to be able to catch up with it. And Microsoft is proving that today, so many years after it was founded. Now, the question is, what's the solution? Is Bitcoin the solution? Well, the last 4 years, Bitcoin's performance is 46%. It's totally crushing every other asset class and every other idea. And it's definitely beating the rate of monetary inflation. This is a chart put up by Bitwise yesterday. This is the last 14 years of Bitcoin. As you can see, the top performing assets, the top of the chart, Bitcoin is winning the investor Super Bowl 11 out of the last 14 years. If you're paying attention, you got to wonder, why is it winning? And is this a gimmick? Now, the advocates of Bitcoin, such as myself, who wear orange ties, we think that Bitcoin is the first perfect money. We think Bitcoin is paradigm shift. We think Bitcoin is the singularity where science collides with economics. We think you have to rethink economics. You have to rethink capital. You have to rethink money. You have to rethink business. You have to rethink corporate finance. That's what we think. And that's why we're winning. We think there's a fundamental technology shift here. There's a fundamental paradigm shift here. And we think we're going to keep winning. We think Bitcoin is digital gold. We think it has all of the virtues of sound money, none of the vices of physical gold, which was that barbaric relic.
Michael Saylor, executive chairman and co-founder of MicroStrategy, delivered a powerful keynote last week at the H.C. Wright Annual Global Investment Conference, making a strong case for Bitcoin as a premier investment. Titled The Digital Gold Rush, Saylor's presentation underscored Bitcoin's role in hedging against inflation and the ongoing devaluation of traditional currencies. He argued that Bitcoin not only outperforms the S&P 500, gold, high-yield bonds, and commodities but also presents a unique opportunity for investors seeking protection from monetary inflation. With inflation rates averaging 13.3% annually, Saylor explained, most assets fall short in preserving real wealth. He warned that investors often misunderstand the impact of inflation on their returns, mistakenly believing they are profitable when, in fact, inflation is silently diminishing their gains. Make sure to watch to the end of this video where Saylor explains why he thinks that Bitcoin has the potential to be a 1,000-year asset. Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio, and get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains market intelligence, on-chain data and latest updates from experts in the crypto space. All of this is available completely free of charge. Signing up only takes a moment and you can always change your mind later on. Now back over to Saylor.
The lifespan of all your traditional conventional assets is 30, 40, 50 years, and you're going to get up every morning and watch CNBC to find out whether Apple won or lost the frickin' tax lawsuit. The first law of money says you divide the value of the asset by the maintenance cost, so something divided by 10 basis points lives 1,000 years. This is the longest duration financial or longest duration asset the human race has figured out, right? We've invented. This is digital capital.
Thanks for watching. Please don't forget to subscribe for news and expert predictions direct to your inbox.